So let me just quickly introduce myself, and then I'll probably try to get a feel of the room in terms of hosts, who's in the audience. So I run the overall operations here for Funding Societies. Was previously based out of Singapore, came home in 2016 to sort of build up and launch Funding Societies in Malaysia. That's where I met Wei Min and his friendly team. So we went through the entire process and we launched in 2017. So Funding Societies is a regional peer-to-peer financing platform. We are present across 3 countries. So we started off in Singapore in 2015, we moved into Indonesia in 2016, and 2017 we launched in Malaysia. To date, we have disbursed more than 2.5 billion ringgit in terms of financing to SMEs across the region. Malaysia, we have disbursed more than 300 million ringgit cumulatively since we began. In terms of number of investment notes, we have given out more than 1 million investment notes across the region, served more than 20,000 SMEs across the region. Right. So today, I'm going to give a quick overview in terms of the peer-to-peer financing industry in Malaysia, some of the recent developments, how has the industry developed over the last year since we had the industry report card presentation last year, and also some of the new product developments that have come up in the last 9-12 months. Right. So before I jump into the presentation, just like to get a show of hands in terms of who's here from the media. Who here are from tech companies, technology companies? Okay. Who here are from banks and non-bank financial institutions? Okay. Who has not heard about peer-to-peer financing? Significant improvement from last year's. So I got a couple of slides in terms of the whole business model and 101 for P2P financing, but then given the audience, I'll skip through them. Focus more in terms of the sort of real numbers that we see in the industry for the past 9-12 months since we last gave an update. Cool. Right. So just an overall general overview in terms of why P2P financing exists. So this was an article a couple of years ago when the whole regulations around peer-to-peer financing was released. Essentially, it is to help provide an alternative financing platform to help solve the SME financing gap in Malaysia. So there's an estimated financing gap of 80 billion ringgit in Malaysia for SMEs, obviously predominantly fueled by the micro and small SMEs, and to some extent the medium-sized SMEs. So just to give a quick recap in terms of what the business model for peer-to-peer financing is about. So peer-to-peer financing platforms are an online intermediary between SMEs and investors. SMEs-wise, P2P platforms serve sole proprietorships, partnerships, limited liability companies, and sendirian berhads, and unlisted public companies. The majority of SMEs that we serve are typically in the micro and small SME space, inclusive of sole proprietorships and partnerships. Right? The value proposition for SMEs is basically the access to short-term financing. The majority of platforms, P2P platforms in Malaysia, they focus on short-term financing that is quite different from banks that typically focuses on longer-term financing. Right? So typically, most of the financing that's being given out to SMEs in this market is typically longer-term and charged against certain kind of collateral or guaranteed by a certain kind of credit guarantee, either through SJPP or CGC. So when it comes to sort of financing to buy a new factory, to buy a new piece of land, they would be sort of longer term, 10, 20, 30 years. In terms of financing, clean unsecured financing is typically 3 to 5 years, equal installments, on average 500,000, 1 million ringgit. Right? So that's the general landscape in financing in Malaysia by banks for SMEs. Right? On the other hand, you have P2P operators that focuses on the smaller segments, the smaller SMEs. Right? Average ticket sizes, 100,000 ringgit, 200,000 ringgit overall, although it ranges quite a fair bit, from a few thousand ringgit to a few million ringgit. Generally a lot shorter term. Most platforms operate or offer financing that are less than 12 months. Right? The other key proposition for value proposition for P2P financing platforms is also the option for collateral-free financing. Right? So there are collateralized options, financing options out there, which provides a lower interest rate, but by and large, SMEs have the option of providing, getting financing without the need for collateral. Right. On the other hand, we have investors, right? So where does the funds come from? Comes from retail and institutional investors, right? As we see regionally and globally, there's greater participation from institutional investors, but for Malaysia-wise, predominantly the focus has been funded by the early adopters, which are retail individual investors that are mostly the millennials, right? So the value proposition to investors is really around being able to invest in a low-cost manner. So most platforms, if not all, do not charge an entry fee. They do not charge an exit fee. They do not charge annual management fees, right? They typically charge a service fee that is a function of repayments, right? So that helps to align the interest between the platforms as well as the investors, right? The other value proposition is in terms of being fixed income. So if you were to compare investing into a stock or a unit trust, there's no sort of quote-unquote promised returns per se. But for P2P financing, investors get a contractual return on, say, a monthly basis or on a quarterly basis of a given interest percentage, right, on the financing or the investment they've given out. Right. Short term, as I was mentioning earlier, and the last piece in terms of being less market correlated. So when I say being less market correlated, it is about the repayment obligations and the value of a particular investment does not correlate with, say, whatever happens in the KLSE. It doesn't matter whether the Nasdaq was up, it doesn't matter whether it's down, the contractual obligation is still intact, right? You will still get your interest, you still get your principal repayments, as and when the SMEs make the repayments based on the scheduled repayment dates, right? So the P2P financing platform is meant to help facilitate the transactions between SMEs as well as investors, right? So not all SMEs that come to sort of P2P financing platforms get put up onto the platform for funding immediately. The platform is responsible for doing the due diligence, credit assessment, and sort of managing the collections of the entire process. Right? Yeah. So the first batch of P2P financing platforms in Malaysia was announced in 2016. Most platforms launched in 2017, right? This year, in May 2019, there were five new licenses for 5 new operators that were being announced by the Securities Commission back in May 2019, right? So this brings to a total of 11 operators for P2P financing platforms in Malaysia. So one common question that we get asked is that too many platforms for a country like Malaysia, right? It's a fair question. But just to put it into context, if you look into Singapore, there's probably at least 20, 30, 40 platforms out there. Not all equally active, but the number of platforms out there is a lot larger than Malaysia. Indonesia, regardless, that's even a larger number given the size of the opportunity in the market itself. So 10 itself relatively is not a large number. And I think one of the very clear messages that's being sent out when you look at the different operators, there are very different focus areas, they're very different value propositions. So that helps to avoid the situation of over-competing for a particular SME or segment that they serve. Right. So of the 5 new market operators that were announced early this year, one of them is already live, so Microleap is already live just recently. I believe the other platforms are in the midst of launching their platform very soon. So what underlies the P2P financing platforms is basically 2 things that protects SMEs and investors. On the SME side, it's about risk assessment, guidelines and regulations around risk assessment. So understanding who the SMEs are, KYC, understanding or assessing whether the SMEs are able to make the repayments on time, right? Second is basically financing restrictions. So for peer-to-peer financing platforms, we can only serve businesses, right, which is sole proprietorships, partnerships, all the way to unlisted public companies. So P2P financing platforms are unable to finance personal financing or consumer financing, right? And there's an interest rate ceiling of 18% per annum. On the other hand, for investors, there is regulations around protecting the funds of investors. So there's a trust account that all P2P platforms have to maintain. So if you're an investor in a P2P financing platform, you have to so all your funds and repayments for investors are handled through a trust account. So at no point in time that the operator of the platform has access towards those funds. Right? The second is a backup service provider, wherein in the event of the platform being unable to continue its operations, there's a backup service provider that will come to facilitate the sort of unwinding of the positions, right? So in the event of a P2P financing platform being unable to operate, the obligations of the SME to repay is still intact, right? Investment limit, this is a soft limit that's being proposed by Securities Commission. So there's no limits if you're a high net worth or you're an institutional investor, but there's a recommended limit in terms of exposure when it comes to retail investors. Right? So now getting into the whole industry experience for the past 9-12 months since we had the update. So in terms of number of successful issuers, it has grown from 600 to 1,500 issuers. So issuers here refers to SMEs. The majority of SMEs would be in the micro and small SME space, right? Amounts raised went up from 200 million ringgit in terms of total disbursements to 500 million ringgit in terms of total disbursements, right? So this is the amount of financing that the P2P financing platforms have dispersed to the SMEs, right? Successful campaigns, we have increased from 2,500 to 6,200. So the number of campaigns here refers to the number of times that an SME is getting financing, right? So bearing in mind or reminding ourselves that most of the financing through P2P financing platform are of the shorter term nature. That means when someone fully repays their repayment obligations, they can come for follow-on financing. So that's what we count as successful campaigns, as in terms of dispersed campaigns-wise. So that's why you see the campaigns number is a lot larger than the number of SMEs or issuers served. In terms of the distribution of financing that's given out, the majority of them would fall less than 50,000 ringgit, right? So underlying the fact that most of the SMEs that we are serving as part of this industry are the micro and the small SMEs, right? Yeah. So these are some examples of SMEs that we have served to date in Malaysia, right? So whether it is a fresh produce wholesaler, electronic products retailer, manufacturer. In general, if you look at the composition of SMEs that we serve, the majority, a significant majority of them would fall into the wholesale and retail trading space, right? And even within wholesale and retail trading space, there's quite a bit of variety. So if you're a wholesale trader, you're a retail trader, you're actually very different from a risk profile perspective. The kind of products that you're trading also matters. So the significant majority of it, more than 50% of it, would be in the wholesale and retail trading space. Another 15-20% of them would be in the manufacturing space. Another 15 to 20% would be in the construction space, and the rest of them would be fairly distributed across the different services, F&B, marketing, and stuff like that. Right. So in short, it is a very diversified pool of SMEs that we're serving in Malaysia. In terms of investors, it's still predominantly focused or funded by the early adopters, right? The significant majority of it, more than 90%, are individual investors, right? So sophisticated investors are just investors that have a high net worth or a declared level of sophistication in terms of their ability to understand and invest, right? In terms of age demographics, more than 50% are millennials, right? A big chunk of it is 35 to 45, right? So this shows the kind of investor or funding base that we've been getting, right? So I think right now, as we scale the industry, we do expect greater participation from, say, institutional investors as well as by the broader population, right? And not just the millennials. A lot of times when we do observe the activity, they happen through either the online channels. A large proportion of investors do invest using the mobile app. Right. Cool. So moving on to some new products that were launched in the 9-12 months. So the first is a collateralized option product. So this is an option for SMEs, targeting to used car dealers, to purchase inventory through an e-commerce platform whereby Funding Societies is a partner to it. Right. So what this does is it allows SMEs access to short-term financing, typically less than 30 days, at a lower cost, and able to sort of complete their transactions, the buy and sell transactions. The other key product that was launched is a principal protected product by Fundastic. So the principal protection product works whereby if you invest into a minimum of 100 notes on the platform, then the principal protection mechanism kicks into place, right? So the reason why it's 100 investment notes is because there's studies that shown that if you invest into more than 100 investment notes, your returns are a lot more stable than someone who invests in a lower amount of notes out there. The last sort of product that was launched is e-commerce financing. So this is targeted towards SMEs or businesses that has been set up fairly recently, right? So as most of you know, the whole e-commerce wave started not too long ago, just a couple of years, and they really are quite different from the typical brick and mortar businesses that you have, right? So let's say if you are a mobile phone trader, right? So you buy and sell mobile phones, say Samsung, iPhone and whatnot. Typically you wouldn't have a business place of operations. You technically wouldn't have 3 years of track record, right? So what happens is that P2P platforms are working with e-commerce platforms in order to come up with a financing proposition that taps into the sort of information that the e-commerce platforms have. So getting access to alternative data such as sales transaction information, their seller ratings, with the consent of the SMEs, and using that as an alternative source of financing instead of going through the whole usual process of getting like bank statements, financial reports, and things like that. So it helps to make it easier for SMEs to qualify for financing. Right? So those are the 3 products that were sort of launched in the last 9-12 months since the whole industry started in 2017. So that's the end of my presentation. I have 3 more minutes and open for questions.
Hello. Hi, over here. Over here. Okay, you said most of the enterprises you fund are micro SME or small enterprises. So how do you underwrite? What's the underwriting mechanism or creditworthiness mechanism for these this kind of funding?
Yep. So it differs across platforms. So there are platforms that rely on sales transaction information that they have via the ecosystem. So for example, one platform has, they provide micro invoice financing to SMEs, right? And what they are able to do is basically leverage on sort of sales transaction information within the ecosystems, the buying and selling transaction, how long they've been trading on the platform, the sales trends and stuff like that. So that's one source of information. There's also other platforms that use analysis of their bank statements, their cash flow performance, their daily balances, the trends. Some platforms leverage on financial statements. They refer to financial statements. There are also, so those are some of the sort of data sources that's being used. A lot of platforms also rely on credit reports, rating agencies, by credit rating agencies. So whether it's CTOS, CBM, Ramsey, they also have access via those reports to the secrets of the company as well as to the directors. So that gives a good overall view of the company's performance. So I've got a couple of questions on my Slido. So I think just to tackle the second question, how do P2P financing platforms overcome non-performing loan issue, right? So just to be very clear, so in terms of default definition, there's a recent effort towards standardization of the default rate definition, right? Now, having said that, default is a matter of classification for lack of a better word. But having said that, there's still the ongoing legal obligations and collection efforts that are being undertaken by the platforms themselves. So the fact that someone has been classified as a default doesn't mean that the collection activities stop, right? So P2P platforms like ourselves would still go out there to be contacting the customer, doing site visits, pursuing litigation or legal action where necessary. So those efforts are still ongoing even when SME is classified as a default. So the recoverability of the SMEs are still, in some cases, intact, even though the classification is now a default. Right now, if you look across the industry, the default rates that are being sort of shown by most platforms are within the 1 to 3% range, right? Just to benchmark that across the broader industry when it comes to SME financing. So if you look at SME financing as a whole in the industry in an uncollateralized manner, typically the default rates are within the high single digits. So that's just to put into perspective the sort of default rates that's being observed now vis-a-vis the sort of overall industry benchmarks. Right? So there's one question around conventional funding. So just to give a bit of a sneak peek, there will be a Sharia, we are working towards providing a Sharia compliant funding investment opportunities or funding opportunities next year. So keep an eye out for that.
Hello, coming. Just ask 2 questions. I'm just curious that how, I'm not doubting the reputation or what, just curious that how accurate and recent are the default rate. I will ask that question because I think some of the people around me, I think they invest, and the default rates, some of their notes have defaulted. So I think the rates shown on the overall rates on the platform can be quite different. So if they raise that question, you know, how recent or accurate the default rate actually is. And also, whether do the platform monitor or is it really up to the individual. And I also wonder how are the things happening in the courtrooms, you know, is there any defaults, what are the interesting cases, what are the updates and all that on the back end of things.
Got it. So I think the first question is around default rates. So there's a recent conversation with the SC in terms of standardizing the way that default rates are being calculated and being presented. So right now, if I may say, there probably are different approaches by different platforms. The intent is definitely to standardize and to publish a standard definition across all platforms. In terms of the accuracy of the information, so this happens behind the scenes, whereby all the information around delinquencies, defaults, investment notes, everything is actually shared with the regulator on a very periodic basis. So they will be able to easily verify the information that's being shown on the website. So that's the first piece. I think the second piece in terms of interesting cases for delinquencies and defaults, I think it's very hard to pin down on one, and I think we probably shouldn't be revealing too much, given that it might jeopardize the collection efforts. But I think the challenge for most P2P financing platforms is how do you balance the need between providing the transparency and the updates to investors versus not jeopardizing the collection efforts, right? Because you imagine if you were to overshare in terms of information, in terms of what is happening on the collection side, what happens on the legal side, what the legal strategy is, then words might spread, and that might jeopardize the collection efforts. So that is the tricky part that most platforms would have to deal with as a result of that. Right?
Okay, thank you very much, Meng.
Cool. Thank you very much.